Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Tuesday, August the 12th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We just had the CPI number. For those of us that are watching the things that I'm saying, I mentioned that we are in a formation that could very likely give us a megaphone pattern over several days, and that is really what we're seeing. If we draw a line this way, trending upwards from August the 8th, that would be Friday, and then a line that takes us, a line that takes us downward. In this formation, we can see this megaphone pattern. We do have Mentor Q's call wall sitting up here at 64.50. I think that is very likely where the test is. There are going to be shorts piling in, and they're probably going to get smashed. Still a lot of people very bearish on the market. Here's something super important. Don't trade your political thoughts about things. Just trade price. Okay, that's going to be the best bet for you. All right, I apologize for being brief today, but the goal action is certainly to get the information out and realize here that old resistance is potentially going to hold itself out as new support. And that line I'm seeing is around 6,420. Notice our opening range 30-minute candlestick formation held its low except for a tick below that 30-minute candlestick. Although, I don't reference it a ton in terms of what we study, you do know it's an anchor point to the formations and as well the very high volume event of yesterday's 30-minute candlestick. We certainly held inside of that. The opening range candle gave us better clarity, kept bouncing off the bottom, and then here we go. Could you take a short up here? Sure. But I would allow this candlestick to do its thing, and then you can go play cowboy. But 6,450 looks like the top end of the range. Let's go to the NQ. Sorry, folks, dealing with a pretty savage migraine. Let's take a peek. Same sort of thing, megaphone pattern. Again, this is the CPI. And let's see if there's any. I don't like trend lines at all. I can't draw them. I don't like to trade them. There's an infinite number of ways to draw trend lines, so I find their accuracy fairly limited. We noticed that our first bullish target of 23,800 just got tested. The second one actually sits at the call wall at 23,850. We've blown right through the key value area, all through this consolidation. Our largest volume candle of the day is the one at 8:30 yesterday. We can see the box here. That may very well be the anchor of support for us, and that number is 23,750. Okay, let's see how it behaves down there to see if we've got follow through or we end up right back in the pocket. Not really sure how the CPI confirms any kind of motion, so my thought is a reflexive action back into the value areas. The opening candlestick formation did the same thing that the ES's candlestick did, stayed within the range, tested the outside of it, move to the upside. Remember, statistically speaking, Edgeful says that we break both areas, the upper edge and the lower edge of this opening range, making the trades at the top of the formation as very nice shorts and at the bottom of formation as very nice longs, with the caveat being that the moving average in general is sideways. Okay? Sideways action. Going to get us to where we are going. Okay. Bottom formations, I don't really see anything bottomy, as it were. However, if we happen to lose this level at 23,750, 23,650 seems like a possibility for sure. All right, let's go to the YM. Sorry, anytime Mentor Q puts up here, it squashes this chart down quite a bit. All right, so what are we staring down? Okay, this is pretty interesting. Largest volume candlestick. All right, the YM is still incredibly range-bound. Have a gander at this. Largest volume candlestick occurred at 9:30 yesterday. That's the one in question. We went to the top, almost, and then rejected it. So we are still sitting in the pocket with this zone being key. And so what is the thought process here? Well, my suspicion is that we move back at least into the 50% range of the candlestick from yesterday, opening at 9:30 Eastern time. So let's measure that 50% range, shall we? Okay, so if per happenstance we lose 44,286, we should get to 44,200. Should being in quotations, of course, because, you know, anything can happen in the mad market that we live in. Pre-market volume from yesterday gives us this pretty sharp pocket of buying. And so it could be that we actually hold 44,305. If you want to trade the long action here, you want to collapse into a 5-minute chart and allow that chart to guide your way in terms of moving averages and the like. Remember, if you've got a sideways moving average, price action's going to be sideways. Just saying. Upper edges, 44,400 to 44,415. Measured move, 44,464. Pullbacks rise, but they could be steep. Volume weighted average price all the way down at 44,211. Because I do not believe the CPI is going to do anything in the long run, I expect to see liquidity come in here with some big selling pressure, but they're going to be slick about it. So eyes open. Wait for a volume exhaustion event, which is a peak of motion with a divergent momentum event. Okay? That's what we look for. Excuse me. Let's look at CLU, or the crude oil futures. That's interesting. We're still in a broad pocket of consolidation. We got a lot of stuff going on across the pond. And at the end of the day, the administration does want oil to be lower because it is one of the peak inputs for inflation. That being said, potential manipulation of conversations might be something in the mix. And yes, our tacit consent does allow the government to tailor information for us. So, what are we seeing? Opening range, pretty tight. Opening range high, $64.07. Opening range low, $63.99. Whoa. I forgot to do micro Bitcoin. I'll do that next. So, this is also a megaphone pattern that has broken and is now in a downward trend event, right? So what are we looking for? The bounce into $63.69 to open up a potential short. The test of $63.10. This might be where I would re-enter. Nothing about exhaustion showing up here. Remember, exhaustion can be identified technically with a rise of price, but not a rise in momentum, or a fade of price without a fade in momentum. Okay? Simple way to look at technical divergence and potential volume exhaustion. Metherq's put wall is up here at $63.95. Could we bounce back into the range? I am so sorry for sniffling all over you guys. The tragedy of allergies. Okay, so that's what we're staring down. Let this do its wiggles, right? Chances are continuation is going to be the order of the day. Okay? It's just one of those things that we might be seeing. Just don't fight the market. Don't think, hey, it should. Why hasn't it? It may. Whatever. Don't worry about that. Let's see. MBT. Let's go. Let's use the current contract. Make it easy for me. Whoa. This looks terrible. Okay, so my first thought is the bounce is going to be a sell zone here. This is some kind of potential liquidity break. Oh my gosh, I'm so embarrassed. Please forgive me, everyone. We've got a high volume candlestick right up here at this gamma line. I have half a mind not to send this video up because it's atrocious. Okay. So the first area of resistance should be that 120,000. You want to watch for that? Pretty important. If it goes right through it, there's a lot of room to the upside. Potentially, that retest of 122,000 and then a breakaway. This gap could get filled, but it might not. Interestingly, the value area is right here. So the key buy zone at this point is 118,473. Notice the opening candlestick formation. Moved above and below that opening range. Why? Flat moving average, right? That flattening moving average. Look to the left. Old support. Really kind of hanging on into this price action event, but that is a very high volume candle, almost as much as the 9:30 candle yesterday. So watch this volume for continuation. If the next 30-minute candlestick opens up above the zone, it's going to be a long. Don't fight it. Okay? If it begins to retrace, well, we fall back into a ridiculous range. So just what happens. Let's go to gold. Z contract, sorry. Boom. All right. So we were having a chat, and I said, hey, use the 9 o'clock candlestick to watch for the price action and its continuation. Why? It's Asia open, and it certainly gave us the target area in general. So if we're staring down gold, that's going to be the region that we want to watch, right? We watch for breakaway, also a big volume candle, but guess what? That big volume candle has not been able to break that 9 p.m. opening candlestick. So resistance is $3,410. If we break that, we're going to start walking through some more volume areas. But it is very congested, and it is my supposition that these bounces are still going to be sold. I don't know why they're selling these. They're in no shape to sell them, but they are. Trend, steeply down. Bounces are going to be sell zones. Got to be careful here. All right, finally, let's take a look at SPY. Call wall at SPY just got hit 640 and backing down off of it. Pretty significant volume for both of these 30-minute candlesticks, both the 8 o'clock candle and the 8:30 candle. Notice 8 o'clock candle up, 8:30 candle clear breakaway. So what are we staring down? Old resistance to potentially become new support. Where might this get squishy? top of the value area high, that's the ideal bounce zone in my mind for SPY. That's 637.92. Gets a little bit sticky if it doesn't immediately bounce off of that area. The zone to watch will be the last 30 minutes of the trading day, and that gives us a floor at 636. We tested it. Listen, this market is so wacky. We could lose this area and go all the way down back into value area low at 632 and even, 634.34 and even 632. So just be careful. My bias is that it fades, but without volume telling us that, we have to just follow whatever price action is saying, and that is clearly telling us that old resistance could easily firm up as new support. All right, folks, I'll see you on the streams.